Hello, guys, and big welcome to the show. This is your market report for Tuesday, July 17th, 2018. And, well, we got a big mover this morning. We got a big mover in the markets. We're going to get right to it, and we're going to open the chart with the big mover first. So I open the charts right here, and here's the big mover. The big mover is silver. Right this minute. Look at this. The green candle is today. This is today's market in silver. We're down 18 cents. We're down almost to 15.50. We got a spike directly downwards. The price of silver's really getting smashed. Now, here's the thing. I think what we're seeing right now, I'm going to predict it. Now, you know, I don't predict things in silver very easy. I mean, a lot of people say, oh, it was going to the moon or whatever a couple months ago in silver and everything, you know, and they say, this is the big one. It's off and off and everything. Well, I'm going to predict something with silver right now. I'm going to predict what we're doing is right now we're making our final bottoms. So it's getting to be the end game in this silver manipulation, downward manipulation game. And I think we're getting ready to put in our bottoms. And when that process is finished, and we put in our bottoms in silver, then you're going to wish you had bought some. I'm just going to say it that much, because these same manipulation that manipulated it to the downside, these same guys are going to be manipulating it to the upside. And this is what it's all about. It's about robbing us. These guys are crooks. And just as hard as they're manipulating it to the downside, you're going to see it manipulated to the upside. And they're accumulating right now. They're accumulating. The question is, are you accumulating? Are you taking advantage of this? Because this is really, silver's unwanted and unloved. Everybody's frightened of it, frightened to buy into it. Right now is the time you should be grabbing it with both fists, because I predict we're making final bottoms in this. Okay, so now let's move over to cryptocurrency. Now, I don't think we're making final bottoms in the cryptocurrency right now. We are still in the bottoming process, even though we see the price going up. And a lot of people are thinking to themselves, hey, you know what? We're going into the bull market right now in cryptocurrency. This is what they're thinking, and this is what they're saying. Oh, we're in the bull market. Bull market's begun again. We're back into the bull market. Let me go back a little bit here in the chart. So go back to the 30-minute. No, that's not going to do it. I'll try the 1 hour. Okay, here, the 1 hour. They think that was the final bottom, 57.74, and that now we're seeing the bull market back again, and we're on our way up. I don't think so. I think that it's going to be a peak of 7,500 that'll make it back up to. If it makes it back up to that, it might not even make it back up to that. And then we're going to see it put in another bottom. I don't think the bottoming process is over for this. I think it's going to continue on for quite a period of time. But I think we're getting close to the end of the bottoming process for silver. So, but cryptocurrency, I think we're going to still see this bottoming process continue for a little while longer. Even though this market I showed yesterday is much more compressed, and things happen much quicker in the cryptocurrency market than they do in the silver market. So silver market, while it's putting in the final bottom, Bitcoin is like going 90 miles an hour down the freeway, and silver is on a bicycle. So we'll see what happens with that. But silver, I believe, is putting in its final bottom now, and it's in its final bottoming process. So the Dow Jones isn't open yet. Oil is open. Let me refresh the page. We're down 67 to 67.49. We're down 57 cents on the day, almost 1% down on the day. $67.49. So we're not riding high like we were when we were at 74.25. That's quite a little difference between $67 and $74. That's quite a little difference in price. Was it $7 difference? in price downwards. I mean, that's quite a little jump in the oil price down. And so, well, I haven't seen a change at the pump though. You know, these guys at the pump, once they get the price up, they like to keep it up. They don't like to bring it back down for us mortals. You know, they want to put it up and they want to keep it up. So they'll delay, even though the price of their price that they pay per barrel comes back down. They'll delay bringing the price at the pump down for like 2 weeks after they're paying less, so they're still getting more. They always pull these swindles on us, and the reason why they get away with it is because we don't complain in mass. We should complain in mass. We should have our fists in the air, but instead of having our fists in the air, we have our heads in the phone, our heads down in the phone, and our heads are down, and they're able to pull these scams on us all the time. Let me see. Is the Dow Jones open yet? It's 10:32 here, and it opens at 10:30. Okay, so refresh the page again. And at market open, we're down 3 points. No, down 6 points now. 25,058. 25,058 we're at, and this is it's kind of like it's peaking off here a little bit. We formed a peak here. We formed a peak here. The peak here is 25,700. Then the next peak was 25,300, and now it's 25,064. So we're seeing a very slow, a very gradual decline in the market, you know. But one could argue that these bottoms are a little bit higher ever since March 23rd. So we put in a bottom of 23.5, and then we put in a bottom of 23.9, and then we put in a bottom of 24.17. See, so the bottoms are moving up at the same time that the tops are going down. But basically, it's narrowing in on zoning in on a spot somewhere probably around maybe 24,500. It's narrowing in on that little channel right in there. I'm expecting this market's probably going to roll over pretty soon. It's going to roll over when the bond rates start to move. Now let's take a look at the bond rate. These bond rates today, it shows all the long bonds falling, where the short end of the yield curve is rising. This moves it more toward a flattening yield curve today. What we're seeing today, this movement today, this action today is moving us more toward a flattening yield curve. We got quite a substantial little increase in the short bond. It's just over 2%, 2.02%. Now that's the first time it's crested 2% in a while there. Going back, how long would it be before it's? I should take a look at the long-term charts. Let's just do that for a second. See how long it's been. Going back 2%. Just a second. Oh, we see a steady rise in this. It's let me see. Let's go back. Try 5 year. Oh yeah. Okay. Oh. Okay. Yeah. So we have to go back. We have to go all the way back to 2007 before we see before we see it. The last time it crested 2% was in 2008, before the crisis. They knocked her down. They kept her down all these years, you know, and now she's creeping back up again. This is going to affect it's going to affect everything, you know, the rising rates, and I can't see it going anywhere but continuing on its upward trend. Let's take a look at the U.S. dollar index now. 94.70. It was as high as 95, and it's been staying pretty stable the last few days. So the biggest mover and shaker today in all the markets is silver. We got to keep our eye on that. Let me just take another peek at it before I go off here. Oh, it's still on its way down. It's just an arrow, a straight arrow straight down. They're going to break this market. If they continue doing this, they're going to break the silver market. And what I mean by break the silver market is they'll run out of physical in the 1,000-ounce bars, because that's what they use for industry and stuff, and they're being supplied by the mines. They really don't have very much in the way of an inventory that's available for sale in the 1,000-ounce bars. And when it's gone, and most of it comes from mining supply. And if they knock the price down too much lower than the price that the miners cost, their cost, they're going to run out of those bars. There's going to be a shortage in the bars available for sale. It's not an overall silver shortage. That'll never happen, where you don't have any silver worldwide. Like, that's not going to happen. But you can very easily slip into a shortage of 1,000-ounce silver bars. It would only be a temporary thing, but it would shoot the price to the moon. And once the price shoots to the moon, it's never going to come back to these lows again where you're seeing it now. You know, this is like ridiculously low for silver. This is almost down to the cost of production. Because what there'd be is, if you do get a shortage in the 1,000-ounce silver bars, how that shortage is cured is when the price goes up substantially. It's not cured by the miners. They take too long. They would take ages to increase production enough to stop the shortage, the miners. They're very steady in their production every year, but if they were to run out of not enough 1,000-ounce silver bars to supply the market, the miners, that's because what they've been doing is they've been cutting back, they've been closing sections of their mine, they've been selling their machinery, they've been laying people off at the mines, you know, and their production decreases year by year because the price is so low. All of a sudden there's a silver shortage, tremendous demand, because all these companies like that make cell phones and everything else, they want it now. There's not enough available, 1,000-ounce bars. So what would happen is that shortage would be cured with a substantially hiked up in price. The price would shoot up to the moon. When the price got up to a certain point, then silver would pour back into the market from sales. People would sell their silver in order to make a profit. That would cure the shortage, because then they'd smelt that silver back down into 1,000-ounce bars, and it would cure the shortage. But so it wouldn't be cured by the miners. The miners would still have a slump in production. It would take them a couple years, probably 2 years, or at least a year. Even if the silver price shot up, it would take them at least a year to gear back up, to buy new machinery, to hire new people into the mines. There's a lag there, see? It doesn't happen immediately with the miners. Just like when they slow down production at the mines, it's not an immediate thing. Production just doesn't stop immediately. Production slows down over a period of time because they're not getting enough money. They're being strangled. And right now, the miners are being strangled. And with this price shooting down like this, oh my God. I mean, this is ridiculous. Now it's down 22 cents. Just on the day. It's down to 15.54. They're going to break this market. A whole bunch of silver investors will come in and they'll scoop up these low prices. Let me explain it to you a little bit. Let me get excited a little bit. Let me explain it to you. Picture this was canned milk. Instead of silver, it's canned milk. So you got your grocery store. Normally they sell the canned milk for $1 a can, right? And they got a whole aisle full of stuff. So there's going to be a big sale. So they put it on for 89 cents a can, okay? So you go in to get some, and you get some because it's only like 10 cents off, and you get some. But what if your local grocery store put the sale on canned milk, instead of 89 cents, they put it on for 39 cents? What do you think would happen? You go in to get some, and there's none available. Why? Is because the hoarders come in at that price, at those really extremely low prices. The hoarders come in and they load up on the stuff, and it's all gone for everyone. And this is the same way with silver. If these silver prices go down too low, too fast, too low, the hoarders are going to come in and they're going to buy up all the physicals left. And they'll break this market. They will break this market. Look, we've seen over a 20-cent drop today just since I've been talking. It's like dropping like a stone. It's only going to go down so low and before somebody's going to come in and say, hey, you know, I'll take it all. Give it all back the truck up here. I'll take it all. I'm a billionaire. I'll take all the silver in the world. I'm going to corner the market. And that's what's going to happen if this continues. I mean, and they can afford to do so. A whole bunch of them might be waiting in the wings, ready to take all what's left of those 1,000-ounce bars. And you guys don't know how many of those 1,000-ounce bars that supply industry are actually left. Sure, you can go down to your Atmex and you know there's a few boxes of the monster boxes and stuff, and that impresses you. You see 10 monster boxes, you know, and you say, oh, there's all kinds of silver in the world because I saw 10 monster boxes. It's not logical reasoning. Those 10 monster boxes can be sold out from under you so fast, and it's all gone. Just that quick. Bang, like that. And if this market keeps dropping like this, they're going to bust it. They're going to break it. It's just like, for me right now watching this, it's like watching some kid that's playing with some sort of a toy really bad. Like he's got your brand new camera and he's banging it on the desk. You know, he's going to break the thing. That's what they're going to do. They're going to break this market. Anyway, listen, thank you guys for listening. Like and subscribe. We'll catch you in the next show. Bye.